following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. It's still cold here in North Carolina, and if it looks like I'm wearing the same shirt every day, it's my sweatshirt and it's kind of cold, so I've been putting it on. Here we go. Crude oil. All right, so one of my New Year's resolutions was to, well, first of all, not get a haircut at Walmart anymore. Kill fewer drifters in the U.S. I'm going to Colombia to kind of mitigate that, and also not go long crude oil until we have some signs to go long crude oil. Right now, and yesterday, in fact, we had another, again, this is our 240-minute, after we broke down below that 36 big weekly unfair low, and you go to the scanner, you take a look at that. Hope nobody's recording this show, what I said earlier, especially the FBI. But as we look at this, we use these profiles that are kind of scaling down in lower term time frames to kind of regulate those long-term trades. 240 yesterday, case in point. We talked about, turn rents the same way, trend's still down. Let's look for resistance areas to sell or breakdowns. 3208 pre-market, we were talking about that, and we actually lurched up into 3221, a little bit of noise there. Provided an opportunity down to 30 in what was that, like a couple hours. Doesn't always work out like that. Sometimes we get stopped out, but this is a really good prime example. Again, things on the lows can go lower, things on the highs can go higher, and let's wait for somebody else to figure out where those tops or bottoms are by losing their money. Let's get some confirmations before the tide turns. And going back to crude oil, and this is the February contract, still don't have the really decent signs going on here that it's okay to get back in the water on the long side and even do a contra trade north on this. I'm going to go to my futures section in the scanner, and by the way, let's see, here we go, crude oil. So again, we red on the sales, you've got the arrow down on the 240, 46 straight bars on the 240 that has been defined downtrend on the 240s. Here's our chart. There's where we're at this morning on our 60s. Here's that 240 view. Again, there's that clip up into that inflection point, 3208. Here's that weekly breakdown recently, and there's that 3681. So, and there's no new profiles attempting to appear here. Especially on a long-term weekly or daily. So it's, I heard some people on the boob tube this morning on the what did Dennis Miller say? CNBC is the liars as Wisconsin is the cheese. You got those people have a tendency of saying things at the wrong time, getting people excited, and then it's very bad timing. A lot of times, fundamentally speaking, you can get on the wrong side of a trade pretty quickly, but you use the technicals to really confirm some of those notions. And in my opinion, we just don't have those yet on crude oil. So it's, again, same old. Gold. Here we go. Talked about trying to lean off of that 1090 for some extra shorts yesterday. That's kind of worked out okay. We're down about 10 points from there, but that 1104 held. We talked about that. We talked about picking some battles around it. Your targets down below are 60 and 68 on this trade. Things don't have to go there immediately, but now you got a new level put in around that 1090, 1091, 1089 That's going to be a heavy lid on this particular thing right now, and it's seemingly and possibly going to drift lower. One of the reasons is we're going to go back to our dollar. We're going to go back to the scanner. We're going to go to our futures section, and we're going to go into, this is really cool now. You don't need charts from another source. And I promise you guys are going to get this weekend. We just had to work out a couple of final details. Here's the dollar edging up. Here's the 240. Here's the daily. We caught a bid off of that 98.30, and I'm still sticking with this for a long-term situation. There's that 98. Let's see. So that's the situation on the dollar, and in the scanner, I want to go back to my Forex section. I want to look at the euro. God, this is so cool. The euro, guess what? Red across the board for the most part. Here's our charts. We're starting to get some momentum. I mean, the euros should be acting a lot more bearish or have some more downside movement, in my opinion, right now. That's a little bit of a concerning situation to me because, the dollar's starting to get on its horse again, and the euro's not really coming off that much, and it's over a 30% inverse relationship by default. So, the dollar is more of a long trade than the euro is a short trade right now. We've been talking about that. I'm just going to stick with that. There's a 60-minute to show you where it's at right now. God, I love this. Can run the whole show without eSignal now. I love eSignal if they're watching. I actually do like eSignal, but you get my point. It's nice to be able to kind of stay within this container. Going back to my futures section, we're going to go into the E-minis here, and this is our daily. We talked about a new profile attempting to appear yesterday, and we talked about if that was going to stay kind of yellow peel back on that sell on the daily by the close, we were going to have some new inflection points to pay attention to. Here's the 4-hour, and this is kind of a prime example of the crude oil analogy we made before, like waiting patiently until areas are hit to try to pick battles on. Yesterday, I was a little more bullish pre-market. This is our 240 than I probably should have been. Waiting patiently until one of these green or red lines is hit is where you want to pick your battles. We were kind of in no man's land when we were doing the show. That's we can't do the show all day long and talk and wait until inflection points are hit. But I want to show you this on eSignal. Yes, we will look at the DAX in just a second. All right, so here's the S&Ps on eSignal. There's that yellow bar we talked about. That was the yellow peel back in the S&Ps. So you've got some targets up top, 53, 54, 58, and 57. So that DMs, you got a lot of overhanging resistance. There's that 57 on the 240s. There's that 58 on the daily now. And that 53, 54 on the weekly is a big number. So you've got a kind of a range there you're going to have to pay attention to. We will be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. One of the things I failed to mention that I wanted to point out earlier was on our on our S&P charts. This is our S&P breadth situation up here. Pre-market, we've got all these calculations going in. Obviously, we've rolled over on our 60 as of. You can't show that. Are we? Okay, gotcha. Okay, all right. Well, what I want to say is before Juan Villegas is on with us. Juan, are you there? Hello? Okay, we don't have the audio yet. So what I'm going to do, let's figure that out, and let's go back to our charts for a second. What I wanted to point out is our 60. This is our 60-minute yesterday. And we're going into today. Obviously, we started going positive yesterday afternoon. Hello?
Hello, can you hear me?
Hey, Juan. Okay. Yeah, great to have you with us. How are you?
Great. We're having a great time. I just came up from vacation, but ready to rock and roll here.
Great. So, guys, the reason Juan's on with us today is I'm going to be seeing him in less than 24 hours, I hope, if everything goes okay, down in Colombia. Looking forward to seeing you, my friend. And
absolutely.
And we'll get a lot done down there. Just to finish up the S&Ps, we've got a new on our daily. I just wanted to kind of put this in as a new demand area on a lot of stocks that are going on. We've got 34.8% of the S&P stocks, 174 stocks that are more than likely going to put in a new profile. That's huge. That's another bullish factor here. So I just wanted to point that out and finish that before we get into it with Juan. Juan, what's on your mind, man?
I guess the same thing everyone is talking about is where's oil going? Where's the bottom of oil and where's the top of the U.S. dollar? So it's kind of that reverse correlation between U.S. oil and the dollar that is having a lot of this. We're here in Colombia. We're having new lows for the big oil company Ecopetrol, which is the number one in market cap in the local stock exchange. So everyone is kind of panicking right now around here because of the oil thing and the dollar and well, a lot of other things that are more from the fundamental area in this country. But everything is pretty dire right now. People are very, very, very stressed out.
Right.
Really stressed out.
How's the currency? Is it still? I haven't really looked at it in the last week or so. How's the Colombian peso doing relative to these lower oil prices? Is it continuing to get deep?
So you're going to have a blast here because you're going to find everything so cheap because it's been devalued 40% in a year. So,
right.
I mean, you'll be able to grab a lot of. There's a lot of tourism coming out from Europe and U.S. to Colombia right now because of the exchange rate.
Right.
And the same thing that we were mentioned before. Once we hit the bottom on oil, we'll hit the top on the U.S. dollar, and the economy will start to change dynamics and momentum. But right now we have a very serious situation as far as
right.
local stock exchange and all that.
So what you're saying is I'm buying dinner.
Oh yes.
Okay. So has the recent? Okay. Got a question from the den. What are some of the largest Colombian stocks and how have they been faring?
Okay, here number one is Ecopetrol, ticker Echo Charlie. Is an oil company, is in its all-time lows yesterday.
So really,
Ecopetrol is number one. Number two is probably the financial sector is CIB, Bancolombia. The other one is Grupo Aval. Those two financials are showing some strength in yesterday in the afternoon session. They show some strength. I'm not ready to buy Colombia right now.
Okay.
And Brazil and all the emerging markets. I think we have to see the bottom of oil for the market to start rebounding, but I'm very confident that it will do it someday. I mean, commodities never go to zero, and Goldman is telling oil will go to $20, and then when we have that dynamic picking up again, we'll see. Now we have another headwinds coming from Asia. China is in big trouble. So what's going to happen in the next year? I don't know. But I will go long. I will start, pounding oil and oil companies probably after I see a capitulation and climactic volume in oil.
Right.
And start slowly buying oil. I think we are not sure. I mean, we have to wait until new boxes on U.S. oil. That's
right,
it.
Yeah.
On the daily, we're just in weekly and monthly, we are outside boxes. So we need to find this new auction happening and buyers taking control and the auction changing from sellers to buyers. All the things that you can do with the scanner. So that's my play. I'll wait for outstanding volume, climactic volume on U.S. oil, and then I'll start buying some. Today we have inventories. We'll see what happens today.
Right.
But I'm more into Goldman's theory that we might see 20s.
Wow. Yeah. It's. I hear what you're saying. I agree with it. I've got the Colombian stocks up that are in the coal cap Colombia sector in the scanner. It's live prices basically without emitting
cool,
live prices. There's your Banco Colombia. Here's your Petrol right there. And I'm going to share everybody something which I know you and I are going to be just really going over this a lot when I get there. Is we've actually got our stocks update in real time now, S&P 500 futures Forex, and by tomorrow we're going to be running all the other stocks live on the charts, the new charts, on the Colombian and the Thai and the rest of the guys out there. So here's Apple, and we're pretty proud of what's going on here. So I think as you talk about these things, and you talk about them you got a show down in South America, and we can reference the scanner now and just basically pick up the charts right off of it. Is hopefully something we won't have to go away from in other charting packages by Monday morning, I would say. It's really weird what you said about commodities, Juan, and crude oil, and it's amazing. I mean, the population of the globe increases, and the prices of commodities are relatively all-time lows almost right now. And the carrying capacity of the planet in general is a certain population if everything works out right. And any type of blips, that do those normal commodity scares, they just haven't happened lately. So, like you said, I mean, putting in a base level for new boxes on crude oil is going to kind of, put a new stake in the ground when it comes to that. But as you and I talk about all the time, I mean, let's wait for those confirmations to happen, and they're just not happening yet. So I agree with you. You still with us, Juan?
Yes,
Okay.
I'm here. Can you hear me?
Okay, great.
So,
I think
yeah.
we got to go to break real quick. Can you stay?
yes.
Great.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Juan, are you still with us?
I'm here.
All right, so the kind of the gorilla in the room down in South America obviously is Brazil. So a lot of people would really love to hear your thoughts on what's going on in that Goliath of a country and the latest, greatest information. So give it to us.
I guess everyone is aware of the problem that commodities, have for Brazil. But not only that, Brazil is in the middle of a political turmoil and a lot of corruption scandals and all that, and it's going to take a while. I remember the front page of The Economist, like 6-7 years ago, where they have the Corcovado, which is a Christ in a mountain. I don't know if you're familiar with that. Ready to launch. Brazil was ready to launch, and then it blew it. It blew it because of, not only because of its political system and the corruption of the political system, but also because of the commodities. Petrobras, PBR, if you have it on the scanner, Petrobras is the #1 company in the Brazilian stock exchange. And also, it is an oil company, and it has the same problems that Ecopetrol has with oil going down, 20s. They're not going to, that stock's not going to rebound in the coming days, months. So we still have to wait. I think it's going to be a very nice opportunity to trade Brazil and all the emerging markets in the coming weeks. It's just a matter of waiting for the setup to get there, and that's where the scanner, plays a very important role, and having the possibility to pinpoint the entry on different time frames. So for instance, I have to look at the 240 on EWZ, which is the ETF for Brazil, or PBR, and then I'll start, buying Brazil. But it's going to take a while. But it's going to be a very interesting opportunity, I guess, in 2016 once oil finds the bottom.
Right. Is it worth it even taking some chances now? I mean, on those ETFs you just spoke of relative to Brazil, or is it just kind of a wait and see, and let's see some green shoots start to happen? I mean, what's your opinion on that?
I'm just a quantitative trading and now market profile trading and task trading, so I just wait for boxes to confirm that is an upside opportunity right now. I haven't seen that yet on the daily, so I have to wait and see. I mean, of course, from fundamental perspective, maybe some people say start pounding. I don't like to find the bottom. I just like to wait for boxes to appear and see if the price is trading above the POC of the daily, weekly, 240. And that's not happening right now in Brazil.
Right. A lot of people, we don't talk about this enough, Juan, on the show, so I'm glad to hear you talking about these PSCs. The PSCs are kind of like the top of the mountain, guys. It kind of rolls down one side, rolls down the other. Those are the high voluminous print areas of a profile, and when they're relatively wide profiles, those PSCs really come into play. And Juan has a why don't you explain? You've got a great automated system that works around PSCs. So I'd really love for you to explain that a little bit if you can.
It's pretty simple. I mean, if
without
you guys
giving away, secret sauce stuff.
No. It's pretty simple. I mean, depending on the time frame, you have. We all know, if you haven't read market profile or auction market theory, there's a point of control. There's a fair price area where 68% of all the trading is going to happen. And inside that 68%, there's one spot, one level, which is the POC, the point of control, the fair value. So what we have done is we have synchronized, or we are in the same chart. I can have access to the POC of different time frames because we have different time frame traders. So when you see the hourly trader, the daily trader, and the weekly trader, converge on the same level, you have a market pivot point. So what we've done is we wait for all those time frames to align and to create clusters, and then we have a very nice opportunity. That scanner is working very nice. I mean, I'm very happy with that development. It's based on market profile theory and auction market theory. It's not rocket science. You just have to synchronize the long-term trader with the short-term trader in the direction where the market is. If you're below the POC, you're going to go short. If you go above the POC or the cluster of levels of different time frames, you're going to go long. Right. But it's very, very interesting because you have the knowledge of where the short term, the medium term, and the long term traders are just putting their bets.
Right. Rob, okay, that's a lot of people.
Of course, with a chart, it'll be easier, but we'll discuss that later, maybe.
Right. Yeah. Cool. So what I'm showing right now, Juan, is I'm showing our breadth charts, and I'm showing, we've started kind of crossed into green yesterday again on our 60-minute on the S&Ps. We put in a really good base here on our new profiles attempting to appear on 174 instruments. 35% rounded off of the S&P 500 of the underlyings are trying to put in a new profile right now. What's your thoughts on the S&Ps?
I will short rallies. I'll wait for this rally to happen, and then I'll short that thing.
Right. Well,
again.
Right. So that being said, I mean, once I'm going to want to look at these breadth situations on our long term. If they stay relatively negative, our short terms, obviously, we've provided some trading opportunities off those 240 unfair lows yesterday. And here's what I'm speaking of. We found some inflection points down here. The rally, the 1954, the 1957, 58, that general area is going to be a little bit of a resistance, Juan. Is that going to be too early for you to short, or are you looking for a bigger bounce to short?
Probably a bigger bounce.
Okay.
Probably a bigger bounce. I'm betting. I'm going. Today is a long day for indices in the U.S.
Mm-hmm.
I guess so. The 240 is showing some potential long, but we have to, if you look at the weekly on the Dow, the S&P and the NASDAQ, that was a nasty bar. It's the biggest point bar, as far as points, not percentage-wise, but the weekly bar on the Dow is the biggest point bar ever in history.
Wow.
I mean, you
My
cannot.
God.
Yes, this is 1,079 points bar. 1,079 points in 5 days. So that tells you that the direction is to the downside still. So we have to wait until we find, the levels to trade. For instance, in Dow, S&Ps, I think. Let me see. We still have some upside, but my area, 1960.
Okay, so
1980.
Okay. So you're going to take some shots maybe around the 60 and around the 80 area and kind of see what happens. If you get stopped out, you get stopped out. Is that what you're trying to say? Hello?
I have some echo here.
Okay, sorry about that. I'll tell you what. We're coming into another break here. Thanks for calling in. I'm going to see you relatively soon. I'm looking forward to it, and man, just looking forward to having a good time with you down there and getting some things out of the way we need to talk about. All right, guys.
We will.
We're going to thanks, Juan. Going to take a break again, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Just similarly speaking, we've got the NASDAQ that put in that new profile today. These are all basing type situations when we have these new demand areas happening. It's interesting. We have that on the NASDAQ. We've got it on the S&Ps. We've got some upside targets on these moves at 19. Again, we talked about earlier, 54 into probably 57, 58. That general area, that DMZ, if you will, that's going to be an area at least to take some targets off. To use those as targets to take some weight off. And gold, again, we're looking for a revisit of 1060 bare minimum. Crude oil, just to kind of revisit some things we talked about earlier. Got a little hint here. If you can see, we've got a little orange situation on our bar on crude oil. I'm going to go back to my futures section of our scanner, and I'm going to look at crude oil, and I'm going to just kind of show you this. This is where we're at. This is our current profile, but remember, we've got a yellow peel back happening. It's not showing up in the scanner yet because it literally just popped up in the e-signal chart. So we're going to see this start to happen in the scanner literally momentarily if you keep your eye on that. And that's kind of what we needed to start seeing, for any type of moves up. Now, we caught this move yesterday. Talked about shorting and turn the wrench the same way around this 3208 area that happened. But now we've got this new sign, if you will, that if this stays orange all day, we're going to have a new demand area on crude oil, and that's going to be something, lovely for people who want to start nibbling on the long side. Let's take a look at the XLF here. This is something we were focusing on. All right, so we talked about this 21.93.22 that seemingly is held on the XLF. We talked about trying to catch a bid on this down here. We've got a new demand area happening on our daily at the same time, which is probably going to proliferate right when the market opens, because this is yesterday's pricing. So we're going to see some new inflection points on the XLF. We're going to take a look at some of these banking stocks, financial stocks, if you will. We're going to look at Goldman Sachs. Again, a lot of these stocks broke down. No mystery to you guys. I know you're aware of this. So you've got targets on the upside, possibly the XLF showing some hints of correction here. Market might drag some things up with it. Targets up top, 175.60 on Goldman Sachs. And you've got, again, a new demand area happening on Goldman Sachs also. So there's some bullish features out there on quite a few instruments as far as the U.S. stock market goes. Don't get too overzealous, of course. Put your stops in. We get clipped not every once in a while. It's just an odds game. You guys know that. We try to spread the risk out, talk about quite a few different instruments at the same time to not have a data sample when you're trading of a small basket. You want to again continue to spread the risk out. Let's take a look at the Canadian dollar. This is something that it's kind of been near and dear to my heart. It's been just the long play of devaluation of all times. I mean, crude oil basing here could cause this. If crude oil obviously starts putting in that demand area, starts showing some signs of strength, this Canadian dollar may reverse a little bit here, so keep your eye on it. But right now, we're still in the nosebleed section of this. It's been something we've been talking about, staying long, buying support. Here's our daily. Here's our weekly. God, I love this, having this in here. Here's our 240. Here's our 60. So, again, if it were me, I would have to see this thing at bare minimum traverse below 142, 141.88. And I'd like to see crude oil start breaking some levels, at least on the 240s, start getting some legs. And this may be something that could catch some move down. But again, you got to have some things kind of in your favor to line up and happen for the Canadian dollar to strengthen, which means the chart would turn south. It's kind of an inverse of what I'm talking about, actually. So anyway, we always talk about, what are the stocks that have, in a market like this, what are the stocks hanging in there? What are the stocks showing their self? What are the anomalies to try to take advantage of? So, I'm going to go to some of these custom sorts here. We've had, uptrend support. We've got strong uptrend. We've got uptrend. Let's just look at strong uptrend. Daggone it, I'm on the wrong sector. Let me go back to my dashboard, get the S&Ps up, and let me go back to strong uptrend. So, we've talked about Equinix. We've talked about Harris Corp, Northrop Grumman, but I want to try to find things that are sitting around inflection points that maybe we can trade off of. So let me go to uptrend support here. These are the ones this morning that have kind of pulled back in a strength type manner into some inflection points. Let's look ESS. Let's just take a look at that. Let me find the most attractive one possibly. Here we go. Let's look at PPL. Let's look at PLD. We looked at that one yesterday, day before. This one this one hadn't really exactly worked out for us here. But again, we try to mitigate pain, and you want things that you want to try to find instruments that, if the market continues to sell off and it's a stock that could be sitting at support, you want to try to find these opportunities, stocks that have been in a defined uptrend. This is our weekly. We've kind of been above profiles here. This is one that, again, market continues to go south like it did yesterday for a while. It just barely got below here. This is pretty much a stop out for me. But this is the type of game you want to play as far as buying strong stocks in a weak market and selling weak stocks in a strong market. Let me pull up PLL. And I think we've got a caller, Charlie from Atlanta right now. Charlie, are you there?
Yes, I am. I'm looking for Ford. They're paying a special dividend, but the point and figure chart says it's going down to $10. Is that reliable?
Say that one more time. Say that one more time, Charlie. Ford. Okay, Ford.
I go to stockcharts.com, and it says it's going down to $10, the point and figure chart.
Okay. All right. So Ford's been kind of basing down here around this 1250 area, and lo and behold, we've got an orange bar on Ford sitting right in our face right now. Let me get back to our dashboard here.
They're paying a special dividend at 25 cents on a share for the shareholder. So what does that do to it?
Let me take a look at it real quick. Okay, see that yellow peel back? I don't know if you're looking at my screen on the daily. We've got a new profile attempting to appear here. It'll more than likely lock in today. Let me see what's going on pre-market. It looks like it's open, it's printing, it's trading 1264. If they're paying a special dividend, that generally is going to have to ratchet down the stock a little bit. That's good that it's trading up actually from yesterday. I think this is something you're going to have a new profile appear here on the Ford today on dailies, and I think if you're looking to wait for 10, I think you've got a little bit of a trade and bounce opportunity right now in it. And where's your your takeout point's going to be around 14 in that general neighborhood, but you you get a bounce from 12.5 to 14. I mean, you do the math. It's a decent move. It's about a 12% move. So that's my take on it.
Okay, thank you. Bye.
Thanks, Charlie.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We were looking at some scan custom sorts earlier. This is PPL. We were looking at this. It's something that was kind of hanging in there and sitting on an inflection point around 33.5. Decent possible play here. Looking to buy. This is not the strongest stock in the world, but looking for stocks that were kind of hanging in there, and by definition, sitting. I'm going to clear out forward here. Sitting on the support area, so to speak, from a custom uptrend support. A custom uptrend support sort that we have on the scanner. Okay, so again, I want to go back to the euro for a second. This is our what do we got here? 3 minutes. I want to go back to the euro, and I want to talk about this again for a little bit. I mean, with the dollar doing what it's doing, and here's our landscape view on the euro. Here's our 108.30. We're below profiles across the board for the most part, and what we want to do here is just look at the chart. These charts are updating live on the euro and futures here. With the dollar rallying earlier I talked about, just so guys catch this, this inverse relationship, the euro against the dollar. We've got about, I think it's 30. I want to say is it 32% of the dollar index? All right, we got logged out of our application there. We're going to come back to it. Hate it when that happens. The dollar is a much better long trade than the euro is a short trade. And, I'm looking at this again on a relative strength, relative weakness basis. So again, the euro trade, not as rosy about that as I am continuing to try to find support on the US dollar. We're back. Okay. So other things to wrap up the show with, we're going to take a look at crude oil. Again, we've got a new profile attempting to appear. We should see that soon in the scanner. It's kind of flashing back and forth. This is something that could kind of appear and disappear. But if we stay new profile attempting to appear and we see that yellow peel back in our crude oil sell there for the rest of the day, we're definitely going to see a new demand area. But we've got hints of it that are flashing right now. It's kind of coming and going. Not saying that crude oil is going to be at a bottom here, but it's something to pay attention to. Gold, just to revisit that, this is something that, we've been kind of pounding the desk. Sell the 1104s, sell the 1090s. Dollar, again, my opinion is dollar is going higher. That's a repricing mechanism for every commodity. So that's something to pay attention to. We're going to get back into our charts here on eSignal and pull up some grains. We're going to look at March soybeans. And, we talked about this as kind of death of 1,000 paper cuts here. Again, a little bit of a move up here past 864. That's kind of a stop out mechanism for me. I got to sit tight on this one and wait. This is our weekly. Again, we've come off of this 854.5 area. Not especially excited about the bounce. We talked about this consolidating down here, and now this is something that's got to be a wait and see. And any type of move or weekly close below 850, 854 is going to be possibly another leg down on this. Remember, things on their lows can go lower. It doesn't have to be on sale just because it's way down here. And this is going to be something, in my opinion, that you just are still looking for the turn to wrench the same way, sell resistance. No real super green shoots on this yet. Got a wide profile here on our 240. You got a selling opportunity at 881 for short-term day traders on this. Guys, you've been great. Thanks, Juan, for coming on again today. And thank you, Charlie, from Atlanta, calling in. We will pick it up again tomorrow. Larry is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.